Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast, December 10th, 2021. So the little sideways chop we had yesterday was the last few days was resolved to the upside, pushed to a new 10-day high, and is now really ready to start testing next week the all-time high, in which case we would see really strong breakouts to the upside there. I think I'm having my stop. I think the 1 or the 2 bar low around 466.50 makes the most sense. Still is allowing you to participate in the upside, giving it about a 1% risk. I would notice that that Lisa's little baby dragon crossover here is still looking pretty good as far as an upside signal. And we tentatively got through this hump of the RL10 nicely today. And looking solid for the weekend. Looking at the sectors next, the S&P was up 0.94. The Qs were up 1.09. Those were the two strongest sectors for the day. Diamonds were next at 0.6. Then emerging markets were flat at 0.08. And then slight sell-off in the treasuries, minus 0.24. And the Russell minus 0.28. So actually a pretty quiet day when you start looking at the extremes of performance. Kind of a quiet day going into the weekend for a change. To the upside, we had blended commodities 1.14, oil exploration 1.21. I found it interesting today that Tesla was up even after Musk's tweet that he was thinking about stepping down. Maybe that's already priced in, as the key person, but I was expecting more volatility out of that to the downside today, to be honest. Is that a sign of maturity in the company and in the expectations that they've sort of achieved critical mass? That could be. Maybe more of a reflection that nobody actually thinks Elon would stop influencing the product development, i.e. nobody takes him seriously on that. All right, lithium 1.5, S&P staples 1.7, Bitcoin 1.8, oil 1.98, tech 2%. Then a nice little cluster up here of companies that have been winners that continue to be winners. 3 out of the 4 are in the industrial space. You got Microsoft topping the board at 2.8. Then Apple, Devon Energy, and TX, the steel company, in positions 2, 3, and 4, all better than 2.5%. It's a pretty good day. Tesla 1.3. Now an abundance of sectors that underperformed. These were all in the green, but underperformed. This energy, consumer discretionary, Brazil, and materials down to 0.62. Bitcoin, lumber, Mexico, the FANGs, agriculture, the other lumber, Simon Property Group, and finance, bringing us down to about 0 from 0.5 to basically 0.1. Wheat and precious metals and large cap blended crypto minus 0.23. Clean energy, blockchain minus 0.86. marijuana 1.1, arc innovation 1.6, S&P bio 1.7, moonshots arc genomics 1.75, VXX down minus 0.64. Now the significant underperformers, Robinhood minus 8%, Cliff, Ethereum, Coinbase minus 3.5%, Squarespace, Virgin Galactic, Alcoa 2.5%, PayPal 1.7, US Steel 1.35, John Deere 0.98. So there's quite a few of the industrials and metals in the sell-off piece. So that just tells me that these little targets to the upside, Apple, Devon, and Tex, those are all individual company strengths there. They're better than the sector, which was better than the market, but not everything in the sector was good. So that tells you that there was some direct buying of those companies. I think Microsoft and Apple are the clear no-brainers going forward. And I think I would stay with Devon and TX for more follow-through. Here's some trades from Stephen and Mark today. So here's Stephen with the Russell. I think Stephen is in a hurry to learn, and so there may be some over trading in here. As long as this is paper trading or low number of shares, for learning purposes with skin in the game, I'm good with it. One way to get total immersion. All right. Both of these trades early, I'm not seeing the logical price level of exits at that level. I think that should be one trade where there's a gap up and you go for it and it's not there. And then this should just be one trade. It's too many trades. Yeah, you don't need two. Now, this is the first one that I see that sort of complies with our targeting. And that is a failure, closing the gap. And now it comes through the dragon and crossing, getting ready to cross the Bollinger Band mean. And it's kind of the VWAP or the PSAR rejection. So that's a good shot to the short side. Maybe we could get a 1, 2, 3 exit here, but still that's pretty good. And I like the quick stop and reverse right in the elbow of the dragon right there. Yeah, this one. Yeah, I agree. Stop could have been framed a little above instead of the previous swing high. Yeah, I think maybe a 1, 2, 3 here. This is a good stop and reverse. 1, 2, 3 exit would be here as it comes back. No, I can't see what that. I can't see what that is. Is that the 270? No, I'm not sure what that is. RL 270s here. So that's the 1, 2, 3 entry, especially after 2 quick losses with a mistake. I think I would maybe want to get this trade here and scratch here. And then I like the short right there. And you noted that. This would have been a reasonable second entry and a quick exit and then a quick re-entry. This is one where I might think about a double size scoop because you're already testing that dragon, the bottom of the RL10 twice. And this is getting in line with the big move of the day. So if you were ever going to put 2 scoops on right from the beginning, that would be the one. A 1, 2, 3 exit would be here. So this No, I guess not. That's pretty good. You didn't let it get out of the dragon. I like that exit. Nice stop and reverse. Yeah, could you have added there? Yeah, that's not much. That's not much gain in hand. That's only half an R, but it is crossing the Bollinger Band mean, and it did not fail further. So yeah, that exit, I'm not sure why that's an exit. Unless you were, oh, I see. Yeah, that's really, make that yellow from now on. And then that lets us know that that's an optional consideration. Now on this one, the 1, 2, 3 exit takes out the low of the second bar and it's crossing the RL 270. I'd actually like to see you get that here instead of here. It doesn't feel like much, but over time, that's a difference that will make a difference. This is a pretty good re-entry because it just cleared the dragon. That's a great exit. I wouldn't mind seeing you get short right there, and then your stop would be the top of the RL10, which you can see works all the way through here, and then you probably cash here, and then long there on the PSAR take, cash here, short there. This is pretty close to that, and that's a good scratch. This is we would call this one a fake 1 and go 2. It just didn't go to because you have like a Z3 pinch. And then it fakes little head fake here and then reverses. That's where I like to get this entry. And you probably would have scratched there. That's a pretty good short. I might, you got the Z3s are pinching. You technically could have taken it here, but that was such a sideways chop that I don't mind you waiting for Z2. Then I think if you, on this one, I'd like to see you get paid. And then that's a good shot. So pretty nice. There might have been 3R of either, there were some accidental fat fingers up in here and a missed trade, and maybe some tightening up, but that could have been another +3 worth, but still you got paid to learn today. That's a pretty good day at work. This is Mark. So what I want you to notice is anytime there's a big gap, that means the day is in play. So you see a gap, it comes down, doesn't quite close the gap and starts reversing already. I love this one. I love that entry right there. Or here, and then during this run up, you get a 1, 2, 3 exit like right there. And that's probably 2R on that one. An additional 2R. This is a great kata too. It comes down, fails to recover, comes back through the dragon, bang, collapsing dragon. Nice recovery for 0.6. When this reverses and comes up, we might have taken this one. You would have gotten a piece. This one, you get that piece. So you get the PSAR flip, cover, and long. So there's a little bit. So just notice that in Brazil, those early morning moves as compared to the late moves. Now, what I want you to notice here is that there's actually some play in this. High, a low, a higher low, winter turns to spring. There's a tradable play in there. And then this one where you have a high in the dragon, a lower high, and a collapse, that could be short. And you'll probably get all of that. And if that's leg 1 and this is leg 2, sometime in the afternoon, you get a low, a higher low, and then this is available. Now, one of the reasons this doesn't look all that tradable is because you've got all this white space here, which is because of those Z3 lines. What I like to do is stop this around lunchtime and then expand that so it's a little bit easier to see the moves. But this one will surprise you That's an entry around 30.63. Yeah, there's only 10 cents there, but you don't know that that's not going to keep going. And even if you just played the PSAR, you get paid. And that's not much of a risk box. Good practice for you on that one. CLF, it's a pretty good 5-hour day at work. Morning chop. So here's the open. Lots of chop, settles down, breaks down, new low of the day. Perfect. Good shot. I'd like to see your collapsing dragon right there, because you got the Z3 pinch happening, and now it breaks to a new low of the day, and now you get that here, although that's still pretty good. And then that's a good second position. I like the cover because I like getting paid, but this little extra boost, that might have been another 0.5 to 1.0 in addition. This could have been a re-entry, but obviously you're out of the office. So that now sets up an owl, a COTA 2, another COTA 2, then somewhere in here an RLXD on the downside. And then just like notice the belly of the RL10s, that makes this a COTA 2. And now feel the beauty of the PSAR, which gives you that whole move here, which would probably be 0.5. If this was 0.1, getting the entry here probably makes that 0.5. But that's good work. You got the meat of the day in here. That's pretty good work. That's like 5R. That'll add up. Nice work. So I'll go ahead and open that just a minute. All right, so still bullish volatile, overbought everywhere. The market's in love. Feels like the risk Z is starting to roll over and trying to push its way higher. Absence of bad news, although the risk Z is still alerting us, as is the ETF2, saying this is still a vulnerable market. But clearly, the best performers, Apple, Microsoft, Home Depot, that's a pretty good crew right there. The holdings in the BMRs are looking pretty good. Still looking good. Energy, tech, consumer discretionary, real estate starting to come on board. I like the stop at the right around 460 on the monthly. I guess, or 455. I don't want to go all the way back to 450. I'd take half that, around 457 maybe. And on the 9-day, 465, I think. I don't want to experience another one of those. And until it gets above the all-time high, this is really no man's land, and I'm not going to give it a lot of wiggle room. I want to see confirmation moving up, then I'll start giving it a little more room. But right now, I want to respect that we got our money back after that little sell-off, and I don't want to give it back. Easier to see on the weekly. I think the hull is pretty good right there, about 463 or even 466 as stops. I like the low and the higher lows developing. So that really starts letting us think we might see a Z3 move up here. That'd get us to almost 490. That'd be pretty good. That's aggressive. Bottom line, it's got to get above the all-time high at like 474 first. Then we're free and clear. In the same way that over here, it wasn't until it got above 454 that we then saw a nice 2-week positive move. 3-day, that's a pretty nice recovery this week. We've seen the daily already. Blended monthly rebalancings, the return of the kings, the Qs, the spies, the real estate, all US all the time right here. Even treasuries, the defensive plays started giving back. So that tells me equities are on the move. XLK, E, and Y leading away. Had pretty nice weeks this week. Pretty much everything did except treasuries. But notice how all of the laggards down here, all of them lagged on the 1 week. The only ones that didn't, commodity-based Australia, Latin America with a little technical bounce. ETF 32, nice little recovery here in energy after getting the beat down. See that right there. They're back to the top of the stack. But otherwise, tech and the US, all US all the time. Don't need to look much further than that. Apple, Microsoft, and Home Depot. That's your story. Alcoa is better as a shorter term trader than as a long-term position, just because of the cyclic nature of the materials. I'm seeing some life starting again. We talked about this earlier this week, but American Express and Visa, both starting to show a little bit of love here. Let's keep that in mind. Yeah. I want to go to the daily. So yeah, we saw it before. Bullish volatile all over, but good sign. Only a handful of dojis today. 4 auto framers, but Merck remains noteworthy. It didn't follow through today, whereas other things did. Lots of dojis in the ETFs, but only 3 auto framers remain. Gold, silver, and treasuries. In the auto framer, Merck, I'm liking. SLV is sort of a, I'd be looking at silver Wheaton, or a Wheaton precious metals, I should say, for that one. Intel has some possibilities. It made some noise earlier this week. On the squeezes, the Dow and the S&P are fairly near the critical 2.0 level. So I'd be watching those. I think oil's ready to make another move. Again, that means a move in either direction, a sharp volatile move, I'm saying. And I like that Brazil is still healing and trying to get better. That's good. Most everything's still in the spring on the ETFs and the Dow. I like this Intel, IBM, and Apple in the summertime, along with McDonald's. And I think Microsoft is on sale too, being in the spring, but making some real positive gains today. Clear winners in every time frame. I mean, you don't really have to look further than that. Right there, that's showing you what the deal is. Where is the juice? Nice little recovery here, but it's still mucking around near the top of the stack. It's had 5 days. It hasn't really broken out big to the upside. Let's see it do that early next week and start healing this little bit of a sell-off that we had. Okay. All right, that's everything I want to talk about today. We'll get tomorrow night. We'll do our last swing frames. Week after that, we'll start picking up the research group check-ins. Phil Wu just sent me the Cornell note sheets for all of the foundation courses. Holy mackerel, is it good? I'll be posting that into the foundations course. And then just word to the wise, the foundations course is available now for $1,000. On January, it's going up to $2,000, and I'm opening that course to a downstream trace of about 100,000 people, and so it's never going back to 1,000. So this is the time to lock that in if you haven't taken it. The creativity course is on 1 January is going from 100 up to 200 for the Creativity 101. So this is a chance to lock in the foundational creativity piece, and that's a prerequisite to take what will be the Fletcher Treatment Foundations course. I just briefed that to our commanding general today. He is in charge of all Army schools, and his intention, he is sending a copy of that book to every general officer in the United States Army and sending it to every school in the United States Army. That's 7,000 teachers, 200,000 soldiers getting trained every year, because he has reviewed the Fletcher treatment on creativity, and the Army is all in on it. Now, nobody else on the planet is teaching Fletcher treatment creativity for traders. Nobody. I'm working on that course right now. You need Creativity 101 to get on board with it as a prerequisite, but that's as good as it gets, in my judgment. That's no lie on that one. All right. We'll see you tomorrow evening. We'll do the foundations course at 8. Foundations Q&A at 8, and swing trade frames at 8:30. The regular coaching group 8:30 in the morning. And you guys know who you are. Okay. Take good care. Oh, I should also say Monday, I'm going to be doing the podcast for the Tharp Institute. It's going to be on due diligence and professional grade work. I'm going to be using the examples of Luke and Ken Hum for their amazing work, along with the work that Phil Wu and Griff Cooper did for us in the foundations course to get all the lessons and all the material documented and standardized for presentation. So great work by all 4 of those guys. Have really raised the bar, have got me remotivated and striving to do better. So very well done. And final note, I'll be uploading the lesson 2 from the protreptic course that I'm taking with the Danish philosopher Jens Larsen. We had an amazing hour this morning. When we were done, he said that there were a bunch of things that he wanted to cover me, but he was too inspired by the things we talked about to even get to the scheduled lesson. It was a pretty special session, and I'll be uploading that in the protreptic course, which is still open. As we're just building out that course, it'll never be that inexpensive again. It's on sale for $200, and I think you would enjoy it. All right, that's everything I got. We'll see you guys tomorrow, and take good care.